Welcome back to the Always Thinking Mindset channel, where we give you positive vibes and simple rules to achieve your goals. Now, in today's video, we are going to discuss what is a 1031, right? Everybody talks about this number, especially in real estate. And did you do a 1031? What is it? We're going to get to the bottom of it. But before we begin, there is a disclaimer. I am not any kind of tax representative, or don't take this as advice. Please consult with your own personal professional service on any big purchase. Why listen to a guy on the internet, right? He doesn't know anything, especially uh, concerning real estate. But if you like today's video, go ahead and give it a thumbs up. It does help the algorithm. You don't have to be subscribed, no big commitment here. And at the same time, if you love the channel, then you already know what to do. So let's go ahead and begin. So what is a 1031? 1031 sounds like a bad math problem, right? Wrong. Thing is, with 1031, it comes from the IRS code, which is the 1031. It pretty much gives you the tax incentive to actually defer taxes. People say, it wipes out taxes. All it does is it pushes it along. And it's called a capital gains tax, right? Because whenever you buy a property, you fix and flip, and then you sell it, the capital gains is from whatever you originally bought it to what you sold it, right? It's that little amount that you gained, and that's what you get taxed on. That's why it's called capital gains. But with a 1031, it is so beneficial, especially with all the real estate investors out there, or even if you're beginning the journey of real estate investing. But 1031, just to break it down, it's pretty much deferral. It has to be of the like kind property or more. So let's say you buy a house that's $100,000. Whoo, I would love to buy a house at $100,000, but we are going to use that for an example. So $100,000, right? Now let's say you're looking at another property and you want to sell your old house, which is the $100,000. Now you can go buy a house of the like kind, right? It has to have sort of the same floor plan, just the same amount. But at the same time, the like kind just means the amount or more. So you could do $100,000 or more, and the profit you make from that first house, you're basically deferring taxes. That's all you're doing, because you're never receiving taxes if you think about it, right? So they can't tax you on what you don't receive. 1031 allows this, and this can be done with apartments, houses, multifamily, you name it. 1031 is an investor's best friend on not paying or deferring taxes, right? Because Uncle Sam always gets his cut. But it is that easy, folks, right? 1031 is beneficial tool if you know how to use it. Be careful though, because there are certain deadlines. You usually have a 45 window gap period in order to look for or to spot your property, and it varies, but they usually give you 135 days to 180 days to close on the property. Now, if you don't do this, what happens? They call the police? No, they just pretty much they wipe out what you're trying to do of the 1031, and then you'll have to pay capital gains tax. Now, with that being said, the benefits of 1031 is actually so tremendous, especially when you're trying to build and get that snowball going of wealth building, which leads me to my next rule of tax benefits. Always look at the tax laws or get with your CPA on all the tax benefits in real estate. That's the beauty of real estate. That's the reason I got into it, because it not only makes you money, but at the same time, it saves you money. It saves, depreciation, appreciation, the whole shebang of just getting into property. And I always say, it's one thing to make money, but it's another thing to find the tax law for that to save more money. And who doesn't want to save more money, especially when you have a high income bracket and you're trying to lower it? So with the 1031, that is the benefit of what it comes with, which leads me to my last rule of always research your tax laws. Tax laws are very, how can you say, tedious, and they change constantly, whether it's a week, a month, a year. Usually the president, changes whether income brackets and all this good stuff. The IRS, Congress, has a new bill, and It's just a constant, ever-changing system, which you have to be responsible for keeping up with those tax laws. Or you can hire someone, such as your CPA or a bookkeeper. But in the end, 1031 is a great option to get into real estate. Once you figure out what you're doing and how to use it and utilize it, then the game gets easy because that's all real estate is, right? It's pretty much how can you buy low, sell high, use tax advantages, make more money, but at the same time, understand that these laws are put into effect for a reason. You got to understand that real estate game is not only what you know, but what you research as well, right? Because you have to keep up with these times of the market and where we're at with laws. But if you like today's video and you got tremendous value out of this, go ahead and give it a thumbs up. Like I said, no subscription is needed unless you like this channel. I do recommend checking out my other videos. I have a ton of information for you on that. But like I said, if you like the channel, go ahead and subscribe. And until next time, we will speak soon.